Good afternoon, everyone. This is Chris Brecher with Simpler Trading and the Chart Patterns Mastery. Can you hear me okay? Mirza, mic check. Can you hear me okay? Great. And Tom G, thanks for mentioning about IWM, about me messing up. So anytime I mess up like that on a post, please let me know. So I really appreciate you doing that if that's you. So if it's not, I still appreciate you adding things in. So, but this is what I want to show you. Number one, and I just did a class on chart patterns mastery, and I just want to show you this is a bear flag on the left. That's a bear flag. Oh, how about here? So let's take you over here. That's a bear flag. There you go. They're bear flags. So everybody asks what a bear flag looks like. There's two of them for you. So right when I'm preparing for this, but there's your bear flags. So I just want to let you know, there's a bear flag. And there's a bear flag. Look at those suckers. So that's a beautiful thing. I just thought I'd show you that. So getting back to it, what are we talking about? Yeah, Tom, like I said, I really appreciate you doing that. So thanks. I mean, really, thanks for doing that. So because if you're wondering what we're talking about, sometimes I mess up on what I post. Like if I put a butterfly instead of I do it as a broken wing by mistake. So anytime if the sound's not working, whatever, what to do, and I really appreciate the interaction. So getting back to it though, about today, Santa Claus rally. Is there a Santa Claus rally or is there not? Well, I'll tell you right now, I was talking to one of my friends that I've traded with now for 30 years, and we were talking about there isn't a Santa Claus rally. The deal is to buy the markets in November 1st and get out before at Easter. That works. Long term, that works. Long term about Santa Claus rally, I think is bunk. So let me show you why. Number one, almost never can I just buy something and walk away because of historical stuff. But this is what I wanted to show you. So you see in there the green. Those are the big old up days. This is 50 years. 50 years, end of October, early November, strong. So that's true, especially the day after Christmas. So this is pretty cool. Day of the month, and look at that, 0.5, 0.5 the day after Christmas. That's just great. On the other hand, look at it prior to Christmas. Not so hot. That's nothing. After Christmas, not so hot. Beginning of December, really not so hot. Look at that. So Santa Claus rally, not sure about that. Now, how about January? Everybody talking about January effect. Go and check out January here, how bad a lot of the things have been. But this is where it changes. If you take this, and let me show you another one. There you go. There's the returns in January, all the years since 1990. Now, the problem with that is since 1990, longer term, we've been in a bull market since 1982. So if you took 1950, this would look a lot different. But as you see in here, most of the sell-offs, I wouldn't say December's the best in the world. I would say, though, that into Easter, it's okay. But the key in there is not if there's a specific day. The key to me is to the specific period. So I go over that first. So when you look at November right here to, let's say, Easter, net is probably going to be up. How about last year? Yeah, it got nailed in December. Just keep in mind it got nailed. Got nailed. So guess what, though? From November 1st to Easter. Yeah, darn right. You had to be in longer. Had to be in longer. So, and also somebody asked me, like, what do you do with a losing position. I was talking about if you're going to buy premium, you got to wait for your setup. There's your setup. Even though here you missed 250 points, there's your rectangle breakout. That it's just a correct use of money. So just keep that in mind. That's the way I look at it. But what I want to show you, net, it was up. Net, it was up. So how about the year before? Well, guess what? Right here, right from there, right in there. And net, well, that was all COVID, the bond market. But net, it wasn't bad. You would have broken even. So now let's drill down. So I'm just telling you those 6 months, sort of the sell in May and go away theory, works better than the Santa Claus rally. So I just thought I'd show you, number one, why is it called the Santa Claus rally? Well, number one, I don't think it happens, but also it's because holiday time, people are sort of happy. That don't laugh. That kind of thing works. I'll go into that in a second. And it's real thin. So retail, a lot of times they're getting their bonus checks. They go and buy stocks and there isn't the liquidity, and it can move the markets at least a day after Christmas. So just keep that in mind in there. So, in there. I will show you another 70-year chart, but it's like I said, January, December, I can only go to 1950 for those kind of grids, just to let you know. But this is what I wanted to show you. So number one, yeah, you could have a Santa Claus rally the day after, but this is how I look at it in here. So I'm going to here. Now I'm just going to go to a daily chart and show you. I can even show a weekly. So I'll show you a weekly chart. And I'm going to show you last year, everybody talking about Santa rally. Look what happened. Yeah, the market got destroyed all the way in here. That's a massive move, 350 points. Did it go up after Christmas? Well, yeah, but it didn't go up beforehand. You needed it to go all the way to January 23rd to make back what you would have lost. So there goes that idea, Santa rally. How about December of 21? Well, guess what? Yeah, it did nothing. In fact, you would have broken even. So how about the year before? I'm telling you, could just go one after the other. So even the years that it looked like it went up, it went down right here. That's right at Christmas. So it's not, I just wouldn't blindly buy because of that. So if you go back to the SPX and you go for a longer term, it's hard on a monthly to see it. But you go into here, even let's say 68, and you're going to see, yeah, it went up there. Sort of. If you got in too early, you actually lost, and guess what? Net, you broke even. On the other hand, net from the lows, you came out ahead if you stayed in for 6 months. So the Santa rally thing, you can't just blindly buy because it's Santa. Now, what I said about everybody in a good mood, when I first was trading, I'm telling you, it seems weird, but when the Cubs won, the markets went up. Yeah, the futures pits are in Chicago. So now you might get mad and say, how about the White Sox? Them too. If both of them won, yeah, then the odds are the market was going up. All about emotion. It's sort of odd how that works, believe it or not. So just keep that in mind. So definitely, if you have a dip, you could sort of bet on it going back to net. No doubt about it. Up. But the key is that if you sell off, you got to time this perfect. And that's just almost impossible. Well, unless you have me. But no, all kidding aside, definitely, you can't just bet on a Santa rally. That's the way I look at it in here. Just can't automatically bet on a Santa rally. That's the way I look at it in here. So when do you buy? Well, let's go over that. So you had last year where you got pounded. So we'll go into 2022. See if I can do it faster for you. There's 2022. You see on how the market got toasted right here, right there. So it got toasted on December 1st, all the way to December 9th. Then you're like, Santa rally, we're going crazy. Well, then it went from 4,100 to, guess what? 3,800, went down 300 points. There's your idea of a Santa rally. Now, keep in mind, I look at bonds a lot, but somebody asked, what's your favorite correlation in your 42 years of trading? There isn't one. It changes every day. That's why you need content providers like Simpler. So you definitely need that in there because it changes all the time. Especially at the end of the year, the correlations don't work the same. At the end of the year, I use chart patterns more. Now, you could say over here, Santa rally. Well, I don't know about that. Yeah, if you bet on a Santa rally, you got hosed. Look at that, 3,900 on 1221, 1229, 3780. So you just can't automatically bet on that. Just to let you know, we could go the year before. What happened then? Yeah, that was real pleasant. That's 2021, right here. 2021 on 1216, it went from 47.30 to 45.50. Did you rally? Yeah, you rallied. But you didn't rally first. That's the whole key. Now you might say, well, how about right after Christmas? You had 2 days up. You had the day before right in here, but that hardly made back that. And then you had that. So it's just not enough. On the other hand, I understand that you might say bearish patterns are less likely to work, but I've seen that this works. I'm not saying on 1226, but I'm saying right here. Now, let me show you. This is how I look at percentage wise. I've been harping on the site, on all the sites I've been on, that bearish patterns are less likely to work up to Thanksgiving. They're less likely to work. There might have been bear flags in here, they didn't work. Once you get past Thanksgiving, bearish patterns are more likely to work. Are they more likely to work, let's say, the day before Christmas? No. They're less likely to work. All about probability. So really after Thanksgiving, bearish patterns are more likely to work. You see it today. You had bear flags today, they worked. You had bear flags the week before Thanksgiving, none of them worked. Yeah, real good timing of when I did a chart patterns short thing. So just a class on selling short. But then you see today, and it worked. So pretty cool. Pretty cool. Right when I'm on here. But the way I'm looking at it is this, that it's all about probability. So right here, bearish patterns were more likely to work all after Thanksgiving. How about the year before? Let's go into that. Now, if it looks like my face is real close to the camera, it is because I'm on the edge of my chair. I think that's necessary when you're finding ideas for everybody and trying to react correctly. So I'm always on the edge of my seat. That's 2021. So there's all this. What happened? Bless its heart, right after Thanksgiving. So if we go into any of these after Thanksgiving into about December 22nd, bearish patterns are more likely to work. All about percentages. So, I mean, that's the way I look at it in here. So, do real good bearish patterns work after Easter into September? Yeah, they work great. That's really the wheelhouse. But I've also seen that some of the best sell-offs are right after Thanksgiving into like Christmas, right in here. So just, keep that in mind. I found that a big deal in here. So we could go any of them you want. So we'll go to last year. I'll just show you. So we'll go into here and we're going to go right here. We're going to go to December 19th and I'm going to use on demand. So that's a rewind if you're not familiar with Thinkorswim. It's a rewind. And this is the way I look at it. You go into here, and thanks for saying that in there, but that's nice of you to say. All right, we're going to go into December 23rd. And we're going to put an hourly chart. And I'll show you what we're talking about in here. So we're going to go all the way back here. That's December 23rd, the SPX of 2022. Just keep that in mind. I think it's an eye opener. What do you notice here? There's a bearish pattern. Did it work? No. Yep, right before Thanksgiving. So how about that bearish pattern? Well, that was on the 30th. Nope, it didn't work. But it was at support. Keep in mind that when I show bull or bear flags, I'm looking at support and resistance. So if there's tons of support, I'm not going to trust it. But you're going to see that in this zone, right at the beginning of December, that's the best time. Bearish patterns are more likely to work. Right here, December 1st. How about in here? You got to be out right there, right in the Christmas time. But as you see, a lot of bearish patterns worked. So the key is a lot of the bearish patterns prior to Thanksgiving didn't work at all. All in here. Just didn't work. Or if there was a sell-off, it was truncated. So, just keep that in mind. That's the way I look at it. So, but I'll show you like now. Yeah, I'm not going to do a class now on shorting, but I'll show you what we're talking about. After Thanksgiving, these bearish patterns are more likely to work. They're also more likely to work if there's lack of support, like there and there. So just keep that in mind. But it's all about, to me, percentages. And when I see the percentages, I'm looking that after Thanksgiving is when I want to look for bearish patterns. Now, right at Thanksgiving, right at Christmas, let's go take that. So we're going to take December 28th. And we're going to go into an hourly chart. As you see, there you go. There's December 15th. That's really ugly. Then you got up here. And really around Christmas, they just don't really kick in on the downside. We could put a 15-minute chart. There. You're going to see there's your December 20th getting destroyed. And really, there was no bearish pattern. So let's take the year before. You see what I see, I hope. You see that topping formation. And then you don't have any bearish patterns. So let's go the year before. Let's go to the 30th. Well, look at that. No bearish patterns. Yeah, bearish patterns up to here, up to the 21st. And that's what I'm telling you. You got to time this perfect. All I'm saying is any bearish patterns around Christmas, I'm not trusting. Any bearish patterns right after Thanksgiving, I'm going to jump on. There's a bearish pattern right there. So right at Christmas, doesn't mean you have to buy, but I'm not going to short right between, let's say, the 22nd and the 28th. Doesn't mean you can't go down, but it means that bearish patterns are less likely to work. I'm going to go into the 20th, 2020. There's a perfect example. Look at this. There's the 21st. Like I said, once it becomes the 21st, I'm not going to screw around. Now, you might say, well, it rallied. Well, it rallied to here. You only broke even. until here, like the very, very end of the year. What's the moral of the story? After the 21st, none of the bearish patterns really worked. So I know 10 million people that thought this was breaking. So I'm just telling you, I know that's COVID related, probably. Let's go the year before. There you go. 28th. Yep, after Christmas. Right here. I bet that's there you go, Christmas time. How about here? That's the 21st. I just can't stress enough that it doesn't mean you have to buy. But to me, what it means is you don't short in this area from the 21st to about the 28th. I just don't think it's enough to make money on the long side. So, in fact, check this out right here, right there. From here to here, you might say, wow, that's a massive move. Literally, that's 20 points. It took 2 days to go up 20 points. It took 1 hour to go down 20 points. So I just don't see this Santa rally thing. I don't want to poo-poo anybody. There, that's the year before. Boy, that was no bargain either. So it's just variable. I would still depend on charts, but I wouldn't depend on charts as much around December 21st. I would depend on charts. Check this out. I would depend on charts in here. This doesn't mean to short. It doesn't mean to buy. What it means is when you get near Christmas time, sure, bullish patterns are more likely to work than bearish. But before then, after Thanksgiving, I think bearish patterns are more likely to work. But here we go again. That does not mean to blindly short or to buy. If I see that, sure, you'll buy if it breaks up. If I see this, sure, you sell if it breaks down. But in here, you just can't blindly buy like a call spread or buy a put spread. So, I mean, that's the way I look at it in here, that you can't just blindly do one thing or the other. You have to combine a lot of different factors. So that's how I look at it. Now, the other thing, though, I like to key off interest rates. But when interest rates went down last December, the markets went down as well. So a lot of the correlations I like using break down at this time of year. So that's when chart patterns become a lot more important, which is nice for me to say because I'm to the chart patterns mastery room. So, but just keep that in mind. I mean, that's the way I look at it. But I'm watching this. So, because a lot ask about correlations. And I thought I'd show you this from last year. On the right is the 30-year bond future. That's the weekly. So that's the weekly. We're just going to show it like that. On the left, I'll show the non-24-hour SPX because it gets gobbed up, and the rollover on the future sort of messed up everything this year. This is what I want to show you. Right here. So you have the stock market go up. That's fine. You have the bond market, though, going straight up. Right here. Straight up for 2 months while the stock market went down. So the correlations break down at the end of the year. That's just what I wanted to show you. That's why chart patterns become a lot more important right after Thanksgiving, because you see it, bond market rally, great rally, all the way to December 16th. On the other hand, over here, the stock market went down on December 5th. Ugly, ugly sell-off. Went down here, right in here, all the way here. So I'm just telling you that it doesn't work as well at this time of year of using the bond correlation. Chart patterns work a lot better at this time of year. And you can see it right now. You go and take the ES on, let's say, an hourly and a 15. And I know a lot of people pissed off last week because the bearish patterns didn't work. A lot of people. Well, there you go. There's one that destroyed a lot of bears. And then you just didn't have any bearish patterns. You did here, and what happened? They hardly went down. That's nothing. So here, sure. But what happened here? That's October. So I'm just telling you, from Thanksgiving, these the bearish patterns are much less likely to work if you even find bearish patterns. They weren't easy to find. Let's just put it that way. But here, a lot of people thought this was breaking down. Nope, didn't. How about here? Well, it went down all of 15 points. That's not a lot. And then you'll see every sell-off was truncated until maybe now. So just keep that in mind. So that's what I'm watching in here. That this time of year, from like Turkey Day, well, that's in the US, but even if you're way overseas, you got to respect the Thanksgiving in the US tendencies. November after Turkey Day to about December 20th. That's when bearish patterns are more likely to work. Now, December 21st to about the 28th, bearish patterns are less likely to work. Bullish patterns are more likely to work. But that doesn't mean to blindly buy. What it means is the probability of certain chart patterns working. And that's all I'm looking at, is that kind of probability. In there. So just keep that in mind. And like I said on here, daily, and I've gone over this over and over and over, that bearish hourly charts are much less likely to work if the market's going straight up. Now, when you see that, hell yeah, bearish patterns are more likely to work. So I'm telling you right now, if this goes right here and you start seeing a nice rollover, everybody's going to give up shorting, even though that's the rollover you've been looking for, but everybody's worn out. So yeah, big old bull market right at the end of October. So, I mean, that's pretty, like, that happens a lot, like I said. So in there. So that's the way I look at that when it comes to overall markets. But I'm telling you, if you want to play longer term put spreads into Christmas, you still got to wait for that reversal. If you want to play bullish ideas, well, you're pretty much overbought. But maybe by December 20th, you can look for bullish patterns. It's all about looking for those patterns, not just blindly doing a trade. So I just want to make that clear on how I'm looking at that. So definitely, it's how you're looking at patterns and historical stuff. So September, October, great for looking. Bearish patterns are more likely to work. The beginning of November, bullish patterns are more likely to work. And then from like the day after Thanksgiving to December 20th, bearish patterns are more likely to work. And it's all about probability. Can't just buy in a certain area and sell in a certain area. So, I mean, that's the way I'm looking at this. So I hope this helps. Like I said, right now, bearish patterns are more likely to work if you find them. So we saw them intraday. So take care and thanks for being with me.